categories, categorizing your trades. So gap up parabolic versus pre-market highs, weak open, red to green on a chart reversal, and failed follow through momentum. Those are some of the ways that I categorize my own trades. Categorizing your trades can not only make you a better trader, but they can help you recover from a trading loss and improve consistency. Each trade that you take should fit into a category that you can identify right away. You need to categorize your trades to reduce the FOMO. Let me see what it does. We all do it. Get into a trade, our famous last words. Let's see what it does. There can't be any of that in trading. You're either right or you're right out. And if it doesn't fit into a category, you don't always know where to exit. Many times our solid wins actually stem from reckless trades. We're rewarded for making bad decisions. We don't go back to our wins and say, what did we do wrong here? We just chalk it up as a W and move on and on to the next trade. A lot of times we're let out of reckless trades without even realizing it. The problem is when it catches up to us, it's too late. In November 2018, I was working on kind of getting to the next level, leveling up. And as with anything, it comes with a learning curve. So as you scale up, these things matter more and more and more. I started short PTI without really fitting it into a category pre-market in November. It was just a trade to trade. Based on seeing some of the smartest guys that I know call it trash, they needed money, the news meant nothing, a good chance it ended red. Heavy, heavy conviction, and these guys, like I said, smartest guys in the room usually make a ton of money. So here I am, I can get a $2, $3 better price than they did. They're already upside down. I use that as an excuse to get short. And what was originally a pre-market scalp and a goal of maybe a couple grand turned into a $200,000 loss. I knew I was wrong as soon as I took the trade, but how the hell did I get there? I went into let's see what it does. I had an internal battle with myself whether it was part of just scaling up or if it was just a bad trade. So I overstayed, I averaged up recklessly, and I ended up bailing on it later on. Capital preservation is a must as a trader. So obviously the next step, as any trader would take, is to fix it all the next day, right? So I came to the market prepared, focused and at peace with my prior day's trade. The market was hot, so it shouldn't take long, but still not good. In fact, that next morning, I had already made a quarter of it back, unrealized, of course. But I didn't take it. Why? Because it wasn't 200 grand. I needed more. So a few hours later, it started to break out, and it failed, slammed right back down, back to my average. I decided, true stupidity fashion, to go ahead and hold it over, because I was too proud to take it off. So that next morning, I woke up to a sweet gap down of $2 or $3 per share, and I lost another 40, 50 grand. Why does this matter? Why am I telling you? Trading's about probability. Had I categorized that Yecco trade, I would have known that I'm betting on something that fails 9 out of 10 times. And that breakout late day is the sell every single time. Yeah, sometimes the 10% that do go, they turn into dries, BBTH, LFIN, TLRY, but the problem is you can fit them on your two hands. So here I am betting my hard-earned money on the chance that I'm actually in the next 1% of the 1% that end up turning into one of those that we talk about and we put on our two hands. So obviously the hole was getting deeper. How do I get back? There are 3 key ingredients. One is get over it. Much like a big win, it doesn't mean shit tomorrow. If you think it does, go ahead, come into the market. You're going to be humbled very quickly. Same thing with a loss. You need to accept the fact that it happened. There's nothing that you can do. It's done. Stop moping around, dwelling, shoulda, coulda, woulda. Focus on the solution. 2, time frame is everything. Nothing happens overnight. So whether you're trying to fix a bad trade or if you're also trying to level up, start thinking about 6-month time frame. Time fixes everything. If you focus on a longer term solution, you're taking the right steps mentally and your goals are therefore more attainable. And get this, there's a good chance that you actually check off all those boxes a lot sooner than 6 months. I did. The idea is to get you in the proper mindset in order to perform. And the third and the most important, and the point here today, is to categorize everything. Some of you guys right now, probably on laptops, probably just took a trade. What category does it fit in? What setup? What strategy? Or did you see somebody tweet about it, you saw CNBC, it had a PR, and you just chased it? Eliminate as many random outliers as you can. Focus on categories that have been proven consistent for you, and go home and review your trades daily. Over time, you're actually building a database. And as you progress, you can add other elements, such as fundamental things to it, to better your edge. Not one trader is the same. So if you do this, over time you'll learn more and more about yourself and what works for you. You know what happens when I get away from this strategy? I lose. I lost a chunk at the beginning of May because I started to chase the 1% of the 1%. We had a lot of good low float runners, and so I started to get a little bit of the FOMO back. I started to chase things. I had 2 pretty bad days in a row. I went back, I settled. You think I tried to make it back the next day? Not a chance. I relaxed, I focused on what I know. I made a longer term game plan, and I waited for my categories to hit. I practiced what I preached. I turned around my May into one of my better months ever, and then June's already tracking for more than that. This is how traders find their secret sauce, the power of probability. If something happens 85 to 90% of the time, isn't that where your focus should be? If it doesn't fit into a category, you don't have a trade. Thank you.